What if I told you the biggest bottleneck in the global economy isn't oil, AI chips, or interest rates? It's a metal we've used for over 10,000 years: copper. And right now, the world is sleepwalking into a supply crisis that could stall the entire green transition. Wall Street is busy chasing software stocks, AI hype, and short-term trades. But the physical world? It's starting to crack. Because the math doesn't lie. We are electrifying everything. Cars, grids, cities, data centers, but we're not producing enough copper to support it. And that gap, it's getting wider. Let's zoom out. Copper is not just another commodity. It's the backbone of modern civilization. Every power grid, every electric vehicle, every wind turbine, every data center runs on copper. Now here's the reality. An electric vehicle uses 2 to 4x more copper than a traditional car. Wind and solar systems use significantly more copper per megawatt than fossil fuels. Global electricity demand is projected to double by 2050. And here's the kicker. The global push toward electrification is accelerating, but copper supply? It's not. Let's talk about the supply side, the part nobody wants to touch. Copper mining is slow, painfully slow. From discovery to production, 10 to 15 years. And right now, ore grades are declining globally. Major producers like Chile and Peru are facing political and environmental constraints, new megaprojects, rare existing mines, aging. Even worse, many of the new discoveries are smaller, lower quality, and more expensive to develop. Translation? We're digging deeper, for less, and it costs more every year. Now let's connect the dots. Multiple industry estimates, including major mining firms and energy agencies, are pointing toward a structural copper deficit emerging this decade. Some projections suggest a supply gap of 6 to 10 million tons annually by the 2030s. That's roughly 20–30% of today's global supply. Let that sink in. This isn't a temporary shortage. This is a structural imbalance. Demand is compounding. Supply is constrained. And the gap? It's accelerating. So why isn't everyone talking about this? Simple. Because copper is boring. It's not AI. It's not crypto. It doesn't 10x overnight. Institutional capital prefers high-margin tech, scalable software, narrative-driven growth, but commodities. They're cyclical, capital-intensive, and messy. So they get ignored until they don't. And when that shift happens, it's violent. Now here's where it gets uncomfortable. The global energy transition, this push toward net zero, depends on massive electrification. But electrification requires copper, a lot of it. If supply can't keep up, you don't just get higher prices. You get delayed infrastructure, slower EV adoption, rising energy costs, grid instability in some regions. In other words, the transition itself gets bottlenecked. This isn't about climate politics, it's about physical reality. You cannot electrify the world without the materials to build it. Now let's talk positioning. This is where things get interesting. Historically, commodities move in cycles. Long periods of underinvestment, followed by sharp price corrections when supply tightens. We've seen it in oil. We've seen it in uranium. We've seen it in lithium. Copper could be next. And if this deficit thesis plays out, you're not looking at incremental upside. You're looking at repricing. But, and this is important, this isn't a guaranteed straight line. Commodities are volatile. Timing matters. Execution matters. Now let's stay grounded. There are counterforces. Recycling is improving. Substitution in some applications is possible. Demand projections could slow if global growth weakens. New technologies could reduce copper intensity over time. So no, this is not a one-way trade, but the imbalance? It's real, and it's growing. The world is racing toward an electrified future, but the foundation of that future is under pressure. And markets? They're not always forward-looking. Sometimes they're distracted, sometimes they're late, and sometimes the biggest opportunities are hiding in plain sight. So the question is, are you watching the narrative? or the reality underneath it. If you want more breakdowns like this, real signals, not noise, subscribe to Capital Unplugged. This content is for educational purposes only and does not constitute financial advice. Always do your own research before making investment decisions.